Daily bias is simple, however, it's been overcomplicated by a lot of educators out there. In this video, I'm going to show you how you can use just candle closures to tell you what the market's going to do for the upcoming day. So we will go over two examples of when we are bullish, when we are bearish, and we will also go over two examples of when to stay neutral. Because staying neutral is one of the most important things within the market. Because day trading is not everyday trading, and once you realize this, this is when you will actually see growth in your trading. So no matter what strategy you trade or whatever you trade, understanding when not to trade is the most important part of trading. So before I dive into teaching you about daily bias, the first thing you need to understand is order flow, and this tells you where the market is and the directional bias of the market overall. So if you're not watching my video on order flow, I would recommend you do so because we are about to go over this right now and it will give you a much easier understanding. However, as most of you know, when we are bullish, down close candles are going to support the market higher. So this is the understanding that you are going to trade with when we are bullish and framing your daily bias. So when you're bullish, these down close candles that are made right here, so every time the market dip lower, this is going to support us to trade higher. And the same thing's done when we are bearish. Up close candles are going to support the market lower. So this is bearish order flow. So you can see this is a bullish market, this is a bearish market. And how does this tie into daily candle closures and daily bias? Well, as we know that the market's bullish, we are going to be looking for bullish candle closures and bullish daily bias setups. So you can see right here that the market's bearish, so we're only going to be looking for bearish daily closes and bearish setups. This is bullish order flow, this is bearish order flow. And when the market is one-sided, this is where we have no order flow within the market. This is where we stay neutral. So with all of this being said, let's go over some examples of when we are bullish, then we'll move on to bearish examples, then we will go into the neutral examples, then move on to some chart examples as well. Okay, so let's go over two bullish candle closures. So our order flow is bullish and we know that the market wants to go higher. However, for our daily bias, what are we looking for on the daily time frame and the candlesticks? Well, you can see right here, this is one of the candles and we traded higher and we closed above this candle's wick. Once we close above this candle's wick, this shows us that the market's bullish and it wants to continue higher. So this is one way that you can understand where the market's going to continue from. If it closes above previous daily high or previous daily low. So you can see this is previous daily high, for example. We trade above it and we close above with a body. The wicks do the damage and the bodies tell the story. So once the body closes above previous daily high, we know that the market's bullish. And the next daily candle, we are looking for a bullish setup and we are waiting for it to trade lower, then trade higher. So we are looking for an open, low, high close on the daily candlestick. And this is another example of when we are bullish. You can see that the market takes out this low. And how do we know that it's going to reverse? Well, you can see no bodies closed below this previous daily low. Once no body closes below this previous daily low, we close within the range of this daily candle. Once we close within the range, we know that the market's bullish and we have buy side liquidity above previous daily high. And this is where we wait for an open, low, high close trading setup to target this candle's high. So this is how simple bullish daily candle closures are. And now let's go over a bearish example. Okay, so now let's go over the two bearish examples for daily bias. So we know that the order flow of the market's bearish and we are trading to the downside. So we will be looking at bearish daily candle closures to give us the idea that we want to trade lower. So this is the first way that you can identify that the market wants to go lower. And you can see this is previous day's low and you can see price close below with a body. So as we said before, the bodies tell the story, the wicks do the damage. So as we close below previous daily low with a body, we are looking for an open, high, low close trading setup for the next daily candle. And this is how we're going to continue the bearish order flow of the market with utilizing these candlestick closures. So you can see here, this is another example. Price trades above previous daily high. Once we trade above previous daily high, what do we do? Well, you can see that the wick rejects away from this area. Once the wick rejects away, we still have a bearish bias because we closed within this previous daily candle. So this is where we will look for short opportunities and we'll wait for the next daily candle to open up, trade higher, and then trade lower. So open high low close setups when we are bearish and open low high close setups when we are bullish. So we've gone over the template examples of when we are bullish and bearish. Now let's go over the template examples of when we are neutral, then we'll move on to the charts. Okay, so now this is how the daily candles are going to look when we are neutral. You can see that this is the daily candle and we stayed within previous daily high and we stayed within previous daily low. So we have sell side liquidity below this low and we have buy side liquidity above this high. So we are waiting for the market to take out one side of the liquidity pool. So if we trade higher and then we reject away from this area, so we have a body which closes back within this candle, then we can look for selling setups to target previous daily low. However, this is where we stay neutral and wait for the market to take out some sort of liquidity. So this is where day trading is not everyday trading comes into play, and this is where your understanding of trading will grow. And then we have another example. So if you made it this far into the video, I'm going to show you this example right here. So we take out previous daily high that you can see right here, and we take out previous daily low. So once we take out previous daily high and previous daily low with one candle, this is viewed as a reversal pattern. So if the market is bearish right here and we take out previous daily high and previous daily low, the next daily candle, we can anticipate it to be a bullish candle and we can anticipate it to trade higher. This is because we had a run on the buy side, then we had a run on the sell side, and this is where we will reverse and we will have a low resistance run to the buy side liquidity. And the vice versa is done. If we take out the sell side and then we take out the buy side, we will have a low resistance run lower. So this is a reversal pattern, and this is where you stay neutral. We've gone over the template examples of when we are bullish, bearish, and even neutral. And I've also shown you a reversal pattern that happens inside the market. So with all that being said, now let's move on to the chart and show you how it forms on the daily time frame. Okay, so now we're going to go over a chart example of bullish candle closures. So you can see right here, this is what we spoke about. We close above previous daily high. We are still looking for the market to trade higher. And you can see we trade below previous daily low. Wick rejects the previous daily low and we stay within the previous daily candle. So with that understanding, this is what we are looking for. So you can see that the order flow of this market is bullish right here. We're respecting all down close candles. However, how did we know that the market was going to reverse? So with these three down close candles, we are looking for the market to trade above and close above these three down close candles, because this is where we're going to have a change in the state of delivery, and then we can focus on our daily bias candles. You can see right here that we also take out this candle's previous daily low. However, we don't close within it, but this candle has no volume to it. So we are going to focus on these two green candles as one, and you can see that we trade below and then we reject away from previous daily low. So what is our next area to target? Well, it's buy side liquidity, and it's above this high, and it's also above this candle's high as well. So this was the bullish example that we spoke about right at the start, where we take out previous daily low, reject away, no bodies closed below, and then we continue trading higher. And you can see again that we have this candle's previous daily high. We close above this candle's previous daily high, drop into a fair value gap, and this is where we trade higher. And then we trade into the buy side liquidity above this candle's previous daily high. Same thing is being repeated that we spoke about right here, where we continue to close above previous daily highs. So we traded above this candle's previous daily high, we had a closure above. Same thing again, we traded above this candle's previous daily high, we closed above it. Next candle, we are anticipating a bullish candle, we're waiting for the open, trade lower and trade higher. And then we are continuing the order flow. Why? Because this is a bullish market, so down close candles are going to continue to support it higher. Then if we look right here, we take out this low. Once we take out this low, what do? We close within the previous daily candle. Once we close within the previous daily candle, where is a nice area for us to target? That is the buy side liquidity of this candle's high, and also this candle right here. So why am I focusing on this candle right here? Well, this is a candle without a wick. So if you made it this far into the video, candles without a wick are a very good draw to the algorithm, because the algorithm looks to rebalance this area within the market. So you can see we closed above, price trades higher. Once we close above all of these previous daily highs, we are still bullish, and we are looking at down close candles to continue supporting the market higher. But this daily candle formation forms again. Price trades into previous daily low, closes within the range, so the wicks react away, and you can see we are still bullish and we continue trading higher. So the same thing is being repeated here as well. And you can see right here where I'm pointing out, we trade below previous daily low, the market closes within the previous daily candle, and then we continue trading higher into the buy side liquidity. So this is exactly how you can frame daily bias when you're bullish with just candle closures. Here we only went over bullish candle closure examples, but if you look closely into this fractal, you'll be able to see the times where I told you guys to be neutral within the market and the examples that we went over at the start. However, this is how you can form a daily bias when you are bullish. Now let's go over a bearish example. Okay, so now let's go over the chart examples for when we are bearish. So you can see right here that we have 1, 2, 3. 3 green candles. Once we close below these 3 green candles, we have a change in the state of delivery. So once the market changes the state of delivery, what do we look for? Well, as we have a bearish bias which is forming, we are looking for bearish daily candle closures. So you can see we have previous daily low right here that we went over at the start of the video, and then the next candle closes below previous daily low. Once we close below previous daily low, this gives us a bearish bias. And the same thing right here, we trade above, take out previous day high, and then we close within the range. So once we close within the range, this continues to give us a bearish bias and confirm that the market wants to trade lower. So if we look closely within this fractal, you can see we have previous daily high. Once we trade above previous daily high, what do? We reject away from this level and then we trade lower and trade into the sell side liquidity. So the same thing's done right here. We have a previous daily low. We close below the previous daily low. So this continues to give us a bearish bias and we are looking for the next daily candle to open up, trade higher and then trade lower and take our previous daily low. So this is our bearish bias. And you can see right here, the same thing happens again. We take out previous daily high. Once we take out previous daily high, we close within the range. Once we close within the range, it continues to support our bearish bias and we trade lower and take out the sell side liquidity. So you can see right here, we have a previous daily low. The next candle closes below previous daily low with a body. So we continue to have our bearish bias and you can see we take out this candle's high. You can see we take out this candle's high. Once we take out this candle's high, we close within the range. And what we're looking for? We're looking for a run on the sell side liquidity. And you can see we take out the sell side right here. And we also have this big green candle. So once we have this green candle, what do we look for? We look for the next daily candle to trade above. Once we trade above, it closes within the range, continue to have a bearish bias. The same thing happens again. This candle has no wick. So if you made it this far into the video, I did explain how candles without a wick are an immediate draw to the algorithm. We trade into here and then we take out this candle's previous daily high and then we trade lower. So this is exactly how you can frame a daily bias when you are bearish with candle closures only. Most important thing that many people don't understand when you're filming a daily bias, it all stems from understanding where the market's going to go. And this all comes from order flow that I have taught you in my previous video. So if you've not watched that or my free bootcamp on my YouTube channel, I would recommend you do so. So now we've gone over the chart examples for when we're bullish and bearish. Now let's go over the neutral chart example. Okay, so this is how the daily candles are going to look when we are neutral. So you can see we have this previous daily candle, we have previous daily high, and we have previous daily low. And this candle closes within the range. So we have buy side liquidity above this high, sell side liquidity below this low. As we have liquidity resting above previous daily high and low, this is where we do nothing and we have a neutral daily bias. And as you can see right here, we have previous daily high and we have previous daily low. So this is a reversal pattern that we went over. However, I like to stay neutral when this happens on the daily time frame. So we take out the buy side liquidity above this high and we take out the sell side liquidity and then we close within the range with the body. So there's wicks at the top and there's wicks at the low. However, the body closes within this previous daily candle. So this is where I like to stay neutral and not do anything. This is how it looks on the chart. So you can see we have a previous daily low right here and we have a previous daily high. The next candle just closes within the range. So we know that this is where we stay neutral. And you can see all we did was consolidate and accumulate within this range. So what does this mean? This is usually where traders are getting chopped up and you don't want to be trading within this range. Let this range accumulate and then you can trade after we break out the range. So this is the example right here where we close within a previous daily candle. We don't take out the high or the low. And this is where we will do nothing and just sit on our hands. And then the next one is where we take out both previous daily high and previous daily low. And then we close within the range. So this candle takes out the previous daily low and then closes within the range. This candle takes out previous daily high and then closes within the range. So this is where we do nothing and we are neutral until the market is one-sided again. And this is the hardest part of becoming a profitable trader, is understanding when not to trade. And what I'm showing you right now is one of the easiest ways to identify when you should not be in the market. So you can see we have previous daily low right here, previous daily high. We failed to take out either previous daily low or the high. And you can see these three candles just stay within this range. And this is where you don't want to trade until the market shows you that it wants to go into the direction you have been anticipating. So in this video, I showed you how you can frame a daily bias by just using candlestick closures when we are bullish, bearish, and even neutral within the market. So with this understanding, I will be uploading a flowchart on my Twitter page, so make sure to keep an eye out on that and make sure you're following. And with that being said, if you're not already, claim my free course. I would recommend you do so. There's a link to that in the description down below. However, with all that being said, I hope you found this video insightful, and keep in mind I'm rooting for you and I hope you find success in this business. As always, have a good rest of your day.